In 2017 everyone was talking about cryptocurrency. Bitcoin was surging past $8,000, $9,000 even $10,000 per coin. And at this point many youngsters were telling their grandparents and family members how they needed to go out there and buy some Bitcoin and be part of the future. All of us who invested in Bitcoin were ready for our financial dreams to finally come true. We had all secured a stake in the future, we convinced our family members to do the same, and we were ready to make millions of dollars. But then before the end of 2017, Bitcoin came crashing down. It hit a peak of over $19,000, before the unraveling began shortly after. In fact, by December 25th of 2017, Bitcoin had already tumbled from the high of over $19,000 to below $15,000 per coin, and then eventually that price retracted to around $3,000 per coin just 1 year later. Fast forward to today and it would appear that we are repeating history. Bitcoin is surging again, approaching all-time highs. The main thing to understand here is that 3 years ago, the surge in Bitcoin and other cryptocurrencies was driven by retail investors. And for those who are not familiar, retail investors are people like you and me, it's individuals who are buying assets for their own personal portfolios. Institutional investors, on the other hand, are actually managing other people's money and buying assets on their behalf. A couple of examples of this are mutual fund managers, pension managers, and even endowment managers. Basically, back in 2017, it was your average person buying Bitcoin, it wasn't Wall Street, and these large institutional investors. Unfortunately, without adoption or acceptance from these big Wall Street institutional investors, Bitcoin was doomed for failure. Which is why we saw that subsequent crash. The reason being is that retail investors have a much shorter time horizon, they want to get rich quick, and when things start to go against them, they're very quick to go out there and sell investments and liquidate everything. As soon as cryptocurrency prices started to go down, millions of retail investors panicked and decided to sell their positions as well. And then of course, we know where the story goes from here. Bitcoin went to a low of around $3,000. But over the last couple of years, it has slowly been returning and growing in value. And then all of a sudden we find ourselves back at all-time highs of 2021. However, this time around things are completely different than 2017. First of all, the biggest difference between the crypto rally of 2017 and 2021 is the type of customer that's actually purchasing Bitcoin. As mentioned earlier, in 2017, it was mostly these smaller retail investors that were purchasing Bitcoin and ultimately driving up the price. The Wall Street investors and the institutional investors were kind of waiting on the sidelines to see what happened, to see whether or not Bitcoin would stay around. Well, now it's not just retail investors, it's a combination of the smaller retail investors, as well as these larger institutional investors on Wall Street that are scooping up Bitcoin. And where retail investors might have a couple $100s to toss into Bitcoin or other cryptocurrencies, these institutional investors are often managing millions, if not billions of dollars. And in addition to that, these institutional buyers are typically longer-term investors. They're not going to buy Bitcoin and then sell it 2 or 3 days later because they changed their mind. They're investing for a much longer-term time horizon. So not surprisingly, in 2021, we have seen some major institutional buying of Bitcoin, as well as some major acceptance of cryptocurrency from these big Wall Street billionaires. The next reason for the 2021 cryptocurrency rally, and another reason why it's different from 2017, is the way in which people are purchasing Bitcoin and other cryptos. In 2017, you had to buy Bitcoin through a separate cryptocurrency exchange. And this of course required you to go out there and open up a completely separate account. You had to take photos of your ID, verify your identity, and jump through all of these different hoops to eventually be able to transact Bitcoin. Now, there are some gigantic mainstream players that are allowing you to purchase Bitcoin and other cryptocurrencies directly on their platforms. One of the biggest ones on that list is PayPal, which announced in October of 2020 that they will be allowing their users to buy, hold, and sell Bitcoin directly through PayPal. And then Square followed suit as well and allowed people to do the same thing through the Cash App. The commission-free trading apps, Robinhood and Webull, followed suit as well, offering cryptocurrency trading right on their brokerage platform. Lastly on the list here we have Fidelity, one of the biggest brokerages out there that rolled out a cryptocurrency platform for institutional buyers. So now instead of having to open up a completely separate account in order to purchase your cryptocurrency, people are able to do it through an account that they likely already have. And when there's fewer hoops to jump through, and people are able to utilize names that they trust and know, like PayPal, well, a lot more people are willing to go out there and begin purchasing cryptocurrency. According to Pantera Capital, PayPal users are now purchasing around 70% of all of the new Bitcoin coming to the market through the Bitcoin mining, and then Square users are buying about 40%. So between just these two platforms, all of the Bitcoin being mined and then some is being purchased on these platforms, which explains why we're seeing so much demand for this cryptocurrency. And why that price is climbing higher and higher. Only 21 million Bitcoins will ever exist with a controlled and dwindling supply. So that being said, what am I doing with my own cryptocurrency portfolio? Essentially, I've been buying Bitcoin in small amounts, dollar cost averaging over the last couple of years. I've also gotten a lot of free Bitcoin through the Coinbase referral program, which is what I use to purchase Bitcoin myself. Essentially, if somebody purchases $100 worth of Bitcoin using my link down below, they get $10 of free Bitcoin and I get $10 for free as well. So if you guys want to use that link yourself, you're more than welcome to. It's going to be down below, if you want to get $10 worth of free Bitcoin and support my channel in the process. Now, I store my Bitcoin offline in a hardware wallet using the Ledger Nano S, and this is Ledger Live, which allows you to track your overall investment portfolio. This ensures that my cryptocurrency is stored safely and I am the only one in control of it. That way there's no risk of this getting hacked and me getting my cryptocurrency stolen. On the surface, it might appear that we're repeating the same events of 2017, but I believe there's good reason to believe that this time may in fact be different. If you guys enjoyed this video and you want to see more Bitcoin or cryptocurrency related content on this channel, make sure you hit a like on this video and drop me a comment down below. Thanks so much for watching, guys. Make sure you subscribe and hit that bell for notifications, and I hope to see you in the next video.